My father invested $90K in individual stocks. How can I help him? I just discovered that my dad invested $90K in individual stocks and now is down to $80K. He chose random companies he found in the AI tech sector. A few are big, like Apple. He is 64 years old, an independent contractor, and has all his stocks in a TD Ameritrade account. I don't know anything about investing in that age bracket. I told him that picking random individual stocks is a horrible strategy, and he's open to changing it. He did ask me for help, and I'm just trying to point him in the right direction. He doesn't have any other assets than these stocks. He also doesn't have a financial education, so he found these stocks from a quick search online. I would stay out of it unless he specifically asked for your advice. Being down only $10,000 isn't that big of a deal. What does the rest of his portfolio look like? Does he have other assets in retirement accounts? Not knowing the full picture, people really won't be able to give good advice. What happens when he takes you advice and his portfolio goes down another $20K and he blames you for it? Stay out unless he asks for help. The entire market is down 12 or more. This isn't a big one-off. If he's done his DD and is making an educated bet, he's well within his right to do so. I feel personally attacked. Your father and I will both recover and do fine. The fact that you think being down 10-15 is even worthy of mention tells me enough to know that you're not equipped to implement any investment strategy for someone else. Just be and let be. The last thing you want to do is ask this sub. It's worse than Wall Street bets lol. WSB regard trying to give his dad financial advice. Rolling on the floor laughing. VTI and look at boggleheads for the lazy portfolio. I think the bigger problem is that he is a most retiree and his allocation is 100 stocks. I mean, it's only horrible if you don't have the education to back it up. Find a local, fee-only advisor for retirement planning. If your dad is asking you for advice here, you need to tread carefully depending your relationship on his level of financial understanding and his expectations for the rest of his life materially, housing, financially, and work expectations. You don't want to be the one to tell him he can't ever retire if that's going to send him over the edge or make him depressed. Try to be gentle in your guidance. While it may not be much to anybody else looking to generate income live off of at retirement, he's worked his whole life for that savings. And that's what he has to work with. Stay TF out of it. Seriously. Don't get involved. Rule 1 of investing. Don't help any friends or family members invest their money. 100 of the time it will come back to bite you in the ass. Leave this to the pros at Vanguard, Fidelity, or wherever he parked his money. 109011 losses are very manageable. The interest rate is very high at 8.2 for mortgage vs 2.5-3.5 not long ago. Many investors fear of any equity at the moment, but his losses are in line with the rest of Wall Street market. I would think he is doing about average for the market. I think he can handle 13 stocks okay. I wish him the best. He should probably just invest in a low-cost index fund or portfolio of index funds with large, mid, small and foreign, and then go on with his life. If you know nothing about investing in individual stocks, and even if you do, then the odds of outperforming the market are extraordinarily low despite what people on Reddit claim personally. 1 or 2 good years in a bull market doesn't make you the next Warren Buffett. If he is 64 and retired, he should have 80 of portfolio in less than 10 years bonds and the rest in stocks. He needs the money now, not in the future, and he can't wait a decade to compensate for his losses. Only down to 80K? That's not so bad. Everyone invested with that amount since June is down 10k lol. Tell him to find an hourly or flat fee fiduciary like a CFP to do investment, retirement, and tax planning. At that age, advice is going to be highly specific to his situation. 2 important things you need to know before you can provide any intelligent suggestions. What is his overall financial picture? What is his objective for the $90,000? In general, the majority of 64-yo will lean conservative on their investments because capital preservation is more important than capital growth. How can you tell him picking individual stocks is a horrible plan, but you're here asking us for help? The first step is to help your father understand the risks and rewards of investing. He should also learn about different investment strategies and asset classes. There are many resources available online and in libraries. And you can also offer to read articles or books with him. Recommend low-cost index fund. Index funds are a low-cost way to invest in a basket of stocks. They track a specific market index, such as the S&P 500 or the Dow Jones Industrial Average. 90 to 80k? Big deal. The market has pulled back and there is a lot of money on the sidelines waiting to return. Hold fast, and companies like APPL are solid and should not be a losing bet unless there are some significant changes, which at this point we are not seeing. What's wrong with investing in individual stocks? If he is in large caps and/or has performed some due diligence, it is not for anyone to question what they do with their money. Even if they haven't performed adequate DD, that is their prerogative to do what they wish. Have him talk to a financial advisor. If he's 64 years old, liquidate the holdings. Put the cash in a high-yield savings account and collect 5 risk-free per year that he can withdraw anytime. Write off the $10,000 loss over the next 3 years on his taxes. This is not the time for risk on. He should be all cash right now given his age and lack of retirement funds. The next 1-2 years expect negative returns in the market due to actions by the Fed. I got much more than that in just one stock. Though it's dumb putting money into a stock without DD. Found out what he invested in. Work out if each play is wise. If not, sell it. If yes, hold it. Apple isn't going away but will naturally move up and down. The rest, if you have to be involved, may be better in short-term T-bills until an actual plan is developed or an advisor takes over. At least he can be getting a modest return relatively safely. Tough spot for both of you. I hope it works out well. I'd get him set up with a fee-based financial advisor. On that works with relatively low fee ETFs and funds, then charges 1 per year for it. Normally I'd say just lead him toward VT Sachs, VEA, etc. But if he's complexly financially illiterate, then paying someone one isn't a bad deal. Why invest if you can't handle the downside? Market is perfectly efficient. Given all the available information, all stocks are priced perfectly. To the point you couldn't make a fund that performs badly if you tried. Just think if you could. Then you could just make money by shorting it. But that's not how the market works. In reality, the only stock picking you should do is to match preferences such as volatility and whether or not you care about things like climate change, or if you want to avoid weapons manufacturers, etc. Advise him to put it all into GameStop and AMC stock. Just joking. Open mouth smile. Honestly, just let him learn his lesson. Seems like he's holding and not making risky moves every day. My dad's bag holding 120k of ARK and down about 30k right now. Me and Mom tried to convince him to take the losses and quit, but we can't.